Okay, this is the post FOMC video. Um, yeah, I mean, obviously it looks like there's a lot to freak out about, but I'm going to basically explain why it's not. I just want to also point out that I did even say that it would probably go to 79.50. Now I was wrong and went to 78. I also thought they were going to wick this. So um, I'm going to explain a little bit on the VPA side and kind of paint the picture here, what we're looking at. Just from an overall, like where we're at standpoint, yes, this looks like a massive sell-off, but when we kind of analyze it within the larger context, I mean, this is a bullshit sell-off compared to how much volume went into over here. So I'm not terribly worried about it. Anyway, want to talk a little bit of VPA here quickly. Let's go look at the 5-minute candles that got us down there. Okay, so let's go take a look at the 5-minute candles. Turn that off, turn this off. Let's just quickly analyze what got us down there post FOMC. Let's analyze the VPA. So obviously it kicked us off with fairly high volume. That's going to kick off this little downtrend. I think a few things to note if we keep going down. We did see a nice bottom wick on this one, so that's good to see. And then very low sell volume on this large spread candle. We see another large spread candle right here, and then we do see a 5-minute candle, decent bottom wick, bulls trying to defend. And then the volume basically just drops off, but we have a very sharp decrease through support. So we basically lose support on very, very, very low volume. So we kind of have support through here, and we break through on essentially nothing, like literally essentially nothing. So we get down there in a hurry, and we break on 0 volume right here. It's hard to see, but I'll try and point that out right down there. Basically 0 volume got us down there, and then we see an absolute monster bottom wick, very high volume subsequent candle. That tells me institutions are buying, and that tells me honestly the first support was down here at 81. If we keep going, we break support or break this long lower wick with these two candles, and both have decreasing volume. We see a very high volume candle coming in with a long upper wick. That volume does not match any of the relative candles. Like out of all of these candles, if you told me this one had the highest, I'd probably tell you bullshit. I'd probably assume that this one, or even up here, or even probably this one had the highest. This candle is smaller than even this candle, which happened 2 candles prior. So massive VPA anomaly that does not make any sense. If we keep going, we see price even gaps below 80 here. It doesn't even, touch 80. It gaps below 80 on the 5-minute. It has probably double the volume than this previous candle did. So that's a VPA anomaly. If we keep going, we see 2, kind of small green candles. It's whatever. And then we see just a massive red candle. Also, again, we would like this to have the largest sell volume if we were truly looking for shorts. If I'm in puts here, I need this candle to have the largest sell volume, at least that we've seen. And it actually probably has the least volume that we've seen since probably back here, which kicked us off, which was these candles back here. Or actually these candles that broke support originally. So just absolutely no volume on that very, very large 5-minute candle. Institutions are pushing price farther and loading the boat. Subsequently, we see from this large spread candle, we see a very small candle, just barely hanging on to 79, but that had an increasing volume. We see another large spread candle, increasing volume, and then we see a very small candle, barely able to close below 78 on, again, increased volume. Then you see, obviously, these 3 candles. This close right here is always going to have probably the most volume. I mean, it's the close, so it doesn't really matter. But I just think that's interesting. So, in my opinion, I think institutions bought the absolute shit out of this. I did actually add to my Jan calls within here, like within, I believe it was, I started to get interested once we saw the first 15-minute anomaly. Like, this made no sense. This candle having pretty much double the volume as the previous, but yeah, I think this does throw off for the short term. For the short term, this is at least on the daily, it's not great, but when we look at it like within relation to these 2 candles right here, this sell volume is not going to be very high. I think probably in the next 9 minutes it's going to load to be probably more sell volume, but still within the context of where we're at, you know, within here, I guess it's pretty low sell volume with a probably the second, third largest candle that we see on our screen. But anyway, that's my opinion. I think, yeah, it sucks for the short term. I mean, what can you do? Could I have predicted fucking FOMC? You know, that's probably a planning hindsight, honestly. I hadn't even thought of FOMC. I personally didn't even know FOMC, you know, was coming up until probably Monday this week. So that's a huge hindsight. That's a huge error, and that should probably be fixed later on. But I still think this thing's fine, and I think, you know, it might suck for our December calls, but I do think this is probably going to be our spring action. You know, I think price is likely going to recover back to 81 within the next few days, hit 80 again, and then go. So I think this was a necessary sell-off. I think this sell-off was purposely designed to accumulate more and shake out longs. I think this was capitulation day for longs, so I'm proud that we didn't sell. And yeah, I mean, the buying started even back at 81, so all of this was just, you know, it's just a great day to flush short or trap longs and then bring this higher. So it's my thoughts on Roku.